If this chart looks a complete and utter mess, then good, because the biggest problem with trading and getting into trading is that every trading video tells you to add indicators to your chart. Trend lines, moving averages, RSI indicators, volume profiles. And the truth is you don't need any of it to get into high probability trades like this. So let me show you how to properly read charts. Right, first things first, let's delete everything. We don't need an EMA. We do not need an RSI. We definitely don't need trend lines. Delete them all. What are we looking at? This is a 12-hour price chart. So in isolation, there isn't much to do here. You could mark it up, but price charts on their own are not very useful. They become extremely useful when you pair them with higher time frame context, because you can then read the intention of price and pair it with execution on this time frame. Now remember, this is 12-hour price action. So we're going to be swing trading weekly, 2-weekly, monthly candles. But price is fractal, so the exact same thing happens on the lower time frames. But this is an example. So we're looking at 12-hour price action, but what we want to do is first and foremost overlay a higher time frame candle. So I'm going to use the 2-week time frame. And suddenly this gives us all the context we need. What is price doing here? It is bearish. On the 12-hour price action, we are seeing bearish price legs trading into bearish order blocks, and we are going lower. Why are we going lower? The truth of why we're going lower is because price is raiding the external range liquidity at this low. So when this 2-week candle was constructed, notice how price action was bullish. What are people doing here? They are setting long orders in the market, and their stops are going right here. The reason this is not a good trade is because there has been no manipulation to cause long positions in the market. So what happens is price instantly opens this new 2-week candle at this point here, entices more sales, and then entices buys, and then instantly dumps into those stops because it's raiding the external range liquidity at this low. So price runs in to the low of the previous candle range, and then what happens? It consolidates and closes here. What this then becomes is confirmed manipulation. We have accumulation, manipulation below the previous low, close inside. Notice how the low of this candle is inside the previous candle range. What this does is expose a new higher time frame target for price, which is right here, because this is how markets move. They accumulate, manipulate, and then distribute aggressively to the opposing end of the range. So now you know this, your execution becomes extremely easy. What you are looking for is price legs in your favor and internal range liquidity that you can trade from. So what do we have? We have sell to buy. This becomes the foundation order block for the move. This is the last sell before the buy that gets displaced and traded through. Price then, importantly, closes here. So when the new candle opens, you see this thrust up. What does that then leave? It leaves a new order block, sell to buy. So we can then place an order from the order block, protecting the swing point, which is at the low of the order block. So if you were to have a very tight stop here, that's your position, and you're targeting the high of the accumulation candle. And it's over a 2.5-hour trade. Yes, you have to experience some drawdown. Why is that? Because price is enticing new sells into the market, where the stops go here. So as price then transitions to actually target the true higher time frame target of price, it's instantly trapping those short sellers and running against them. This is how to trade. This alone will make you a profitable trader, because this is how markets move. They accumulate, manipulate, and then distribute. Let me show you this on another pair. So AUDUSD. I'm just going to take these higher time frame candles away. again, if you're reading this price action in isolation, it's going to be very difficult. And I promise you, no indicator is going to make you profitable on this price chart. But if you overlay higher time frame context, straight away you can see what price is doing. Again, we have this bullish candle. Price opens a new 2-weekly candle. The 12-hour remains bullish and it raids the liquidity at the high of the candle right here. So price runs into the high and then aggressively shifts. Price then comes into this internal range liquidity and dumps again. So this candle has confirmed manipulation of the previous candle range. So now we have a higher time frame target for price. Accumulation, manipulation, distribution. The new candle opens and instantly turns bullish. So it's trying to entice longs into the market. We get sell to buy, bullish fair value gap, price comes in, fails to go higher, consolidates. It's really struggling here to move higher, as it should do if we're looking for long entries. Then what happens? Price shifts. We get a bearish shift. What do we see? Buy to sell. Here's our order block. So there is the order block. It's the last buy before the sell. And it's the exact same thing in reverse. We go buy or sell here from the order block, covering the high. Where are we targeting? The low. 2.89 our trade. Again, it's so easy if you're patient. And again, this is how markets move. Accumulation, manipulation, distribution. If you are looking to confidently read charts and understand the intention of price, then I urge you to remove all indicators from your chart and trade this accumulation, manipulation, distribution phase of price. And the good news is I have a 30-part series on my YouTube channel for free that you can go and learn this exact methodology from. And you can go from literally a beginner to someone that knows more than 95% of traders in the space of a couple of weeks. So go over to my channel, please subscribe and cover those playlists in detail. See you on the next one.